Welcome, everybody. Glad to have you all join us yet again for another one in our series of weekly webinars. The topic today is really focused on an aspect of LNG market evolution that is both very important for long-term sustainability of the industry, but also rather new, really, in terms of how we discuss LNG and its future going forward. Real briefly, before I hand it off for the first of our presentations, and then we get into a moderated discussion, I was actually participating in a meeting with some people in Osaka this morning before this, and the entire theme of that event was the evolution of LNG markets. And it shouldn't surprise anybody that's joining me here on this panel, but I wanted to let everybody know that after we discuss pricing and contracting and all sorts of other things and what COVID means, carbon neutral LNG entered into the discussion in a big way. So this is definitely something that people are thinking about all over the world. And fortunate enough to have today with us to sort of give us an introduction into this discussion, Stephen Miles. He's one of our fellows here at the Baker Institute and also with Baker Botts. He recently made a presentation along these lines at Gas Tech. So for those of you who got to see that, you might have seen a bit of a preview of what we're going to discuss here today. But Stephen, I'm going to go ahead and pass it over to you, and then we'll introduce our panelists as we get to that phase of the program.
Thank you,
Sure.
Thank you, Ken. I appreciate it. And Laura, if you want to start the slides, that'd be great. So thank you, everybody, and good morning to those in the U.S. and good afternoon to those in UK and Europe, and for Frederic and the rest of the folks from Asia, thank you very much for dialing in at this late hour. Appreciate all that you guys have done to join us today. So we have a fantastic set of panelists who are really leaders in this industry. We'll do a little bit of introductions later, and Ken. We're very fortunate to have Ken Medlock as the moderator today, and he'll lead a panel discussion. But I did want to be sure to thank Martin, Frederic, and Thomas for joining us, and they'll be speaking in a few minutes. It should come as no surprise to everybody on this call that natural gas and renewables are competing head-to-head, not only for new capacity, but for investment, of course. On the left is the EIA's Annual Energy Outlook 2020, and you'll see that their projection is over the next 30 years, coal and nuclear decline, both as a percentage in terms of market share of the overall fuel mix, but also in absolute terms. Natural gas more or less holds its own in percentage, but grows as the demand for energy grows, and renewables, of course, grow. So we have head-to-head capacity between natural gas and renewables. And in fact, for 2020, EIA says 76% of all new capacity will be renewable in the United States, and 24% will be natural gas. And on the right-hand side, you see a very similar set of outcomes by the IEA for global capacity, with solar, wind, and gas having the greatest growth in the industry, so in the world. So what's driving this? Of course, policy changes. I think everyone's pretty aware about those. Customer preferences for clean energy, and we have Frederic will be talking certainly from the perspective of a global energy merchant based in Singapore, and we're very excited to have Martin, of course, also join us as leader in this industry. But increasingly, we're seeing this transition being driven as well by investors and lenders. And investors, one of the clear signs of that is the Principles for Responsible Investment, which has 3,100 signatories, $110 trillion in assets. Over 50 countries are represented. And then on the debt side, the lending side, the Partnership for Carbon Accounting Financials, which has over 70 members, representing $9 trillion in assets, led by Morgan Stanley, ABN AMRO, and other leading financial institutions. So how is the industry, the natural gas, the LNG industry, how is it responding to the ESG demands? Well, some are rightly pointing out that the existing ESG attributes of LNG and natural gas, as they are more climate-friendly substitutes for more carbon-intensive fuels, such as coal and oil. But other companies are looking for a path forward to reduce or offset emissions further. And certainly our speakers today have been at the forefront and leaders in that. And they're trying to make their companies more attractive to ESG investors. And they're also trying to make their product a cleaner product and of greater potential value to customers and buyers. And in some cases, that may mean generating some kind of premium, if that's possible, if the market permits it. In other cases, it may just mean beating out the competition for sale. Just a moment about some other topics that come in this line. Here are the terms reduced carbon, carbon neutral, green LNG terms, regulatory body or policy group. As Steve Hill of Shell said at Gas Tech last week, there is no carbon-free LNG. We can reduce carbon and we can offset carbon. Those are really the two fundamental choices, and we'll talk more about that in a moment. Either way, what's clear is that carbon accounting is a reality and growing. I know Frederic and Pavilion have been at the forefront of this as well as Martin and Sempra. And so we'll look forward to hearing from them. But measurement, reporting, and verification requirements for life cycle carbon dioxide equivalent emissions have become a reality, even though there are many different MRV standards, and they are evolving from jurisdiction to jurisdiction. And we'll chat very briefly about that in a moment or two. So if we're going to look to address the GHG, the greenhouse gas emissions from a company, but in this case, particularly LNG, what scope of emissions should the seller be responsible for? What part of the value chain? Well, this has been addressed in terms of both product standards and company standards. And you see here a chart that describes predominantly company standards. Scope 1 are the direct emissions that a company produces itself. Scope 2 are the indirect power emissions. So if either produces or if it buys power from a third party, what are the emissions from that power? And then scope 3, which is picked up in the product standard, is everything else. And by everything else, I'll point to one example on the left-hand side, that bottom purple scope 3 indirect arrow, just to pick one out, business travel. So if you're doing a scope 3 emissions, you're picking up the GHGs that are emitted as a result of business travel for yourself and your partners. And on the right-hand side, the downstream side, just as one example, end-of-life treatment, retirement of products. It's when we get this to scope 3, it's true life cycle of the product. So some key questions in thinking about which scope one should be responsible for. What happens if you don't control the entire value chain? How do you, and then of course, how do you measure or quantify the emissions? Do you use actual measurements? Do you use deemed measurements? If you're going upstream and you're looking at methane emissions from E&P providers or pipelines, are you physically measuring every valve? What's the way that happens? And then who audits this? Who verifies this if the company is making these comments themselves, these measurements themselves? And here's where we really come into something that's particularly important. It's always important for companies in the public domain, but it's particularly important in the ESG world, which is the credibility and accountability are going to be critical. ESG investors are increasingly sophisticated and are developing mechanisms to hold companies accountable. If you're in the hydrocarbon business and you're trying to show your ESG bona fides, you probably get only, as I say to my kids, you only get one chance to make a good first impression. You probably only get one real good shot at this. And if you lose people's trust as a hydrocarbon company, it's going to be really hard to get it back. Companies face the question of whether to reduce or offset emissions. that will depend upon what your customers are seeking. If they want tradable offset certificates, that's something in particular. Sellers may not control the full value chain. So as much as they may want to reduce carbon throughout the value chain, scope 3 emissions, they may not really have a way of reducing that. And so they may have to go into the market to offset it if they're truly going to end up being carbon neutral. And offsets are maybe purchased or generated internally. Afforestation and avoiding deforestation are popular these days. And I'm glad we have Ken here, among other things. I'm hoping he'll have a couple moments to talk about the Be Carbon initiative that the Baker Institute and he are providing so much leadership on, investing in renewable energy, and so on. There are many NGO, non-government organizations, and other groups that have standards that exist for measuring and verifying offset credits. And credits may or may not be tradable by the LNG buyer. So all of these factors go into the decision as to whether to try to reduce or offset GHG emissions or both. And what have we seen over the last 12 to 15 months? There's really been no uniformity. Some companies have addressed carbon at only one stage of the value chain, some just the downstream piece, some just the liquefaction. A few have addressed carbon through the full value chain. Some have used internationally accepted MRVs, measurement, reporting, and verification standards. Many have not, which sort of creates this question about what is it that's actually being, how much carbon was there initially, how much is being reduced or offset. Some have reduced carbon, some have offset. With those who offset, some issued their own offset certificates, some bought certificates that are tradable and in the public domain. Some used third-party auditors to verify, most did not. Some are transparent and some are opaque. And one of the most interesting, this is from a website of a major supplier of natural gas to Europe. You can choose gas which is either all or partly carbon neutral. We offset the carbon footprint of your gas through energy efficiency and community schemes, and you get a certificate to show you've chosen a carbon neutral supply. Just specify carbon neutral gas when you ask us for a quote. And in this particular seller does not provide any information about a measurement standard, about auditing, testing. So it's an example of something that is somewhat opaque. It might be real, you just don't get any real information about it. So let me wrap it up there because we have these fantastic speakers ahead of us. I would just note in conclusion that the LNG industry and natural gas industry are going to continue to face pressure, increasing pressure from renewable energy as governments, customers, and investors focus on measures to reduce carbon emissions. Governments, NGOs, investors are becoming increasingly sophisticated, holding companies accountable, but there is as yet no uniformly accepted standard for measuring emission reductions or offsets, and that's holding the industry back, the LNG and natural gas industry back from being able to make a coherent case as an industry to the public that natural gas should be considered as a fuel that is helping to meet climate goals. My recommendation would be the LNG industry look to move quickly to come together to adopt one or a few uniform standards with buyers and sellers, investors and lenders, and policymakers working together so that we can move this forward. So thank you all very much. Appreciate it. And Ken, over to you and our fantastic panel.
Great. Thanks, Stephen. Excellent presentation. I think what we'll do now is just sort of dive right into our panel discussion. Now, Frederic, I'm going to hand it over to you first. As soon as you're done, we'll go to Martin and then we'll go to Tom. Afterwards, we'll just get into a conversation. And if I can use our benchmark from last week when we kind of got together and talked about this, I'm pretty sure that the ebb and flow of this conversation will be pretty robust. I'll certainly interject, Stephen. Thanks for the prompt. Some words about the carbon initiatives that we're engaged in here. But certainly, I think you hit the nail on the head. A process of measurement and verification that is something that could be certified and trusted is vital for growth in this space. So, Frederic, Martin, Tom, what I'm hopeful you guys will do in your opening remarks is really lay out your place in this discussion, because I think that will help frame the rest of the conversation. So, Frederic, over to you.
Yes, good evening from Singapore. I do hope the mic is good enough for all of you. So in March, Pavilion Energy launched the industry world and the first LNG supply tender with carbon neutral ambitions. So we have very specific ambitions. The tender that's to supply LNG to Singapore for 5 to 10 years. So it's moving on to the long-term horizon. So let me explain some of our context, rationale, and learnings. Singapore moved away, as most of you know, from coal about 15 years ago, and therefore natural gas now occupies the top spot in the generation capacity, nearly 100%, and that will remain, though, alongside the developments like everywhere else in renewables and hydrogen. But natural gas is here to stay for the foreseeable future. So it used to be traditionally imported mostly by pipeline from Indonesia and Malaysia, now more and more through LNG imports. And we're positioning Pavilion Energy as you said, Singapore's energy merchant on the global scale. And we've developed platforms to trade LNG, to ship LNG, to trade natural gas, and to optimize the portfolio, but with deep roots in Singapore gas market, in the Spanish gas market, and in the UK gas market. We've been founded and we are owned by Temasek, and therefore we are assuming a role of a key market participant in Singapore. And to that extent, we take on both the challenge of supplying, supporting the energy mix of Singapore and supplying natural gas strategically, but at the same time, the nation energy transition roadmap, as you know, has been quite robust and in the implementation phase. So that's really where we started. And in that concern, we had to balance both the supply mix and our requirement for balancing our supply and demand, as well as our take on a proactive but pragmatic strategy on the sustainability front. That's a bit of a delicate balancing act, obviously, between affordability, security of supply, and sustainability. What we did, and one nice trigger in all of that the price of a supply contract with Pavilion Energy, which I would qualify as a quality buyer, also gave some impetus to the competing suppliers, and therefore they had to show us their best sustainability side, I would say, and pitch for it, as well as their motivation for such a partnership, which we'll start and take on for the foreseeable future. So what are the building blocks on the sustainability front of our RFP? As you said, Stephen, first is to develop and agree a methodology for GHG counting on the value chain, so from upstream to delivery of each cargo in Singapore. And that must be accurate, transparent, based on factual, as much as close as possible to actual data, but also standards and protocol for GHG reporting. And that's key, because then the objective is to be able to issue some form of certificate or statement of emission for each cargo of GHG emission, for each LNG cargo that is being delivered. So we go from a very macro approach to a very pragmatic counting of CO2 ton equivalents for each cargo, and that's aggregating sort of consumption or footprint from the upstream, from the production, from the liquefaction, for the transportation, and trying to reconcile baseline expectation as well as with actual context for each cargo. So it's a pretty sizable endeavor. What are the main benefits? Well, we do hope that by having standardization and transparency, then we can promote that and therefore help our customers in Singapore but elsewhere to understand their specific footprint and then driving carbon offsetting and decarbonization strategies. For example, as you said, it might spur investments in nature-based or other carbon offset generating projects. But we also further assist, our stakeholders to manage their exposure to regulatory requirements, because ultimately, if we can net off some of the taxation or the regulatory constraints that are being put or will be put in the future, at the same time as it's not just about ESG, but it's quite important in the development of each of the companies across the world, and at the same time being able to offer carbon neutral solutions to their own customer on the retail side, for example. So it's really having the tool to further monetize this certificate ultimately on the regulatory perspective across the chain, but also on a trading perspective, because then we promote transparency, certification, tradability of carbon offsets in the marketplace. And then we promote carbon pricing, either through voluntary exchange hubs as well as emerging ETS across the world. And that obviously can only work if there is national policies that are interlinked and that ultimately can offset, you can net off obligation coming from the regulatory side with the voluntary carbon offsetting on the other side. So we are putting tools together and hopefully bringing a momentum across the industry to achieving that. And that's new for us, that's new for the industry. So here remains the challenge. And that challenge is not just, as you say, working on our bit, but working on components of the value chain that we do not control. But we do hope that through those supply partnerships, through the value of trading and supply and demand, then we can build on that. For ourselves, the challenge will be to look beyond this tender towards structuring it and towards expanding it, not just for our Singapore requirements, but also for our broader portfolio, and the same for all market participants. So critical is going to be the partnership and industry collaboration. And for that, I would say is we need ambition, we need to be patient as well, but we need determination towards achieving that. And we certainly are determined, and only then will success prevail. And the success is pretty amazing when you think about the carbon issues. So now, and I guess long before all the pledges that we are seeing around zero carbon ambitions of these big companies, carbon neutral LNG is an effective and modest but efficient way to enhance the attractivity of natural gas in the energy mix, in this energy transition. And given the other, what I call the AAA credentials, affordability, availability, and accessibility that we all know that are strengths in the gas, I think a greener gas is certainly contributing much better towards a greener path, and especially out of the COVID-19 crisis. So outcomes for us, what we intend to achieve, I guess first is to proactively engage in energy transition in a pragmatic way, and also to change a mindset. If we start acknowledging what is our footprint for each cargo, and we start taking it into our trading behaviors, our decision patterns for investing in new ships or choosing this or this supplier, etc., then we start having and making an impact, and that can only be good for all those requirements to ensure the future of natural gas in this energy transition spectrum, pushing away coal, pushing away the other fossil fuels, and really strengthening the attractivity of natural gas. Second, it's really this notion that by doing though, we have a better grasp at the challenges and the balance between sustainability and economic benefit, but also not looking too far ahead in the future, but having a kind of immediate impact. That obviously can be well complemented by what we are doing, which is also developing strategies and roadmaps on renewables and on hydrogen. So, but I mean, to conclude, I just want to reassure all the commercial folks around that LNG price is still a key factor in our decision for awarding the tender, but we can talk about balancing act. Thank you.
Thank you, Frederic. Interesting discussion, and certainly challenges ahead, but also opportunities. I mean, I think you laid out very nicely what we as economists like to think about when we think about value chain development and new markets, a classic coordination problem. And transparency is key to overcoming the issues that present as a result of that. Martin, I'll go ahead and pass it over to you.
Yeah, thank you very much, Ken. And thanks for putting on the panel. I think what I would say is I would pick up a little bit on what Frederic was just saying, because I think Frederic has said it well in many ways. From our perspective, we see this at Sempra as change is coming to the market, right? And we see that, we are big believers in, the value of what LNG will bring to the energy transition and the critical nature that it's going to play. But it has to be able to play it in the right way. And there's going to be, there's going to be change in how LNG is looked at, how it is reviewed, and we see this happening. And the change that's happening it's nascent, right? I think both Ken, you and Stephen both said this in your opening remarks. There isn't a lot of standardization, and as Frederick was honing in on, that's what the industry really needs. I mean, this is a commodity that gets moved around the world, and so to make it most valuable to those who are going to be play in this space, it needs to continue to be a valuable commodity within the change that the industry is going to go through. And so for us, back to your kind of question, Ken, of what we at Semper are focusing on is we know this is coming, and so our focus is how to manage it, how to be part of the solution. And I think something that Frederick said is spot on, which is it's going to require, particularly at the early stage, a partnership between suppliers and off-takers, right, to make this work, because we're going to have to develop the mechanisms now in a way that can adapt, because a little bit different than how industries sometimes develop, this isn't just purely market driven, right? This isn't saying we're going to, the market's going to start developing, a Henry Hub, supply base and Henry Hub pricing as part of the overall portfolio of LNG. There's a policy overlay that's going to be pushing this. And that overlay and that push is going to be coming from different jurisdictions, and they're going to be coming in different ways and at different speeds, right? But nonetheless, you have a commodity that is a global commodity that, to be most valuable, will get moved from one basin to the other, will get traded. And so how to do that, and as Frederic was again, rightly, honing in on, doing it in a way that's transparent, that's verifiable, that can go with the commodity, but then because we're Semper and we always look long term, how do you set up arrangements that suppliers, again, in partnership with their customers, can have a long-term mechanism that will necessarily adapt, because there will be some changes in the policy overlay, right? As we look at, when I look back at different changes around different industries, particularly in power, looking at how renewables developed, right? One of the things that we at Semper kind of look at a lot, because we had a large renewable business, is how did that develop, right? How did pricing around greener electricity, how did pricing for renewables work? What lessons are there in how we think green LNG is going to develop, right? And one of the lessons is things change dramatically over time, as policies change. And how do you adapt that into your long-term supply mix? So that way, signing up something early doesn't then burden you, 5 years, 10 years in, when there's been some changes in how the market is working. So I'll be brief to get into the more of the back and forth. But for us, that's the challenge is how working in partnership between supplier and off-taker, acknowledging that it has to work to make sure that LNG can go around the world. So I'll pause there.
Great. Thanks, Martin. I thought it was really interesting the way you laid out the kind of dual challenge, if you will, you and Frederic both, because you've both referred to measurement and verification as being critical on the upstream side of the business. In particular, actually being able to measure and monitor what the GHG footprint is, and this includes methane, it includes carbon dioxide, everything. But there is another issue that is front and center here. It's how do you measure and verify, the offset programs that are engaged in when you're selling certificates. So it will be interesting to see how those coordinate going forward, because that is inherently those are two very distinctly different types of activities. So I think when you talk about partnerships between suppliers and demanders, I think ultimately that's going to be the critical linchpin in making sure that all of this stuff ties together nicely. Tom, I'm going to pass it over to you.
Thanks, Ken. Thank you for having me. And it's a real pleasure to share this virtual stage with forward thinkers like Stephen, Frederic, and Martin. You heard Stephen's presentation giving an overview of low carbon LNG and some of the drivers behind its emergence, and Frederic's presentation about Pavilion's ambitions and his view on their path forward. And Martin talked a little bit about how low carbon LNG will continue to play a critical role in the market. I'd like to speak briefly about some of the structuring and contractual considerations involved in implementing a low carbon LNG program. Step is going to be to think about human resources, which you probably didn't expect to hear from a lawyer. But if you think about it, in the traditional SPA world, you typically send forth teams of technical, commercial, and legal representatives to structure, evaluate, and negotiate LNG SPAs. Overlaying this new requirement requires a real different skill set. And you'll want to include some environmental or sustainability personnel on your deal team now, who will help you evaluate and comply with the complex requirements and mechanics of MRV, offset credits, and so forth. Some organizations already have this in-house, and some don't, and you may need to consider bringing in consultants. The second thing you want to think about is where you sit on the value chain and how that'll affect your obligations or what your ask is in terms of carbon reductions or monitoring LNG. Another way to think about this is that project structure really affects your obligations. Are you a buyer? Are you a seller with assets up and downstream, from the wellhead to possibly liquefaction? Are you a merchant seller that merely buys gas and liquefies it and sells it either on an FOB or DES basis, in which case you may have some shipping? Or are you a tolling services provider, either for liquefaction or a regasification? And the answer to each of these questions will govern how you address the MRV offset reduction obligations. For example, if you're an integrated seller, much can be done in-house, so to speak, because you have control over a large portion of the value chain, potentially. Many greenhouse gas emission sources will be under your control. And that's going to reduce the number of counterparties with whom you have to contract and coordinate to address and achieve whatever MRV or offset or reduction obligations you're agreeing to. On the other hand, if you're a toller who doesn't own hydrocarbons at any point, but is likely to have an MRV or even reduction goals or obligations, you have much less outside of your control, but you'll nonetheless likely be talking to counterparties and your tolling customers with respect to these requirements. For those of you that caught it on Stephen's presentation, the pie chart there showed that liquefaction is about just north of 10% of the greenhouse gas footprint, and regasification is 5%. So even that those small parts of the entire value chain, while not huge, are still significant portions of the greenhouse gas footprint of LNG cargo. And at some point, you're going to have to memorialize your agreements into a contract. The obligations associated with green or low carbon LNG are, in many respects, new obligations, as Stephen, Frederic, and Martin have already indicated. The world is learning about how to accommodate these. The industry is figuring this out as we go along. But broadly speaking, what are these obligations? You need to understand what MRV requirements are, what is being monitored, and who's responsible for it. As Stephen, I think, correctly said, in many cases, you want to get it right on your first try. Transparency is going to be key, right? What, if any, are actual reduction obligations? Well, MRV is the first step. The next step is, how do you reduce the greenhouse gas footprint? That is the ultimate goal of this exercise, right? Do you do it from reductions in your operations? Is that possible? If you can't reduce, will you be required to offset? That's going to be memorialized in a contract somehow. Other reps, warranties, and covenants are what methodology is going to be used to quantify GHG emissions. How often are you going to calculate whether that target's been met? Is it going to be done on a cargo by cargo basis? Is it going to be done monthly, annually? What happens if there's a diversion, right? In the LNG industry, you often send cargoes to someplace else or receive cargoes from someplace other than your originally intended supplier. How do you manage breaches and remedies? How does a breach of your MRV or your offset obligations affect your long-term sale and purchase obligations? Will it be treated as a breach of SPA obligations? What is the remedy for failure to achieve greenhouse gas or offset targets? Other issues include force majeure. If there's an event, for example, upstream that's outside of your control, for example, as a seller, how does that affect your obligations to your buyers? If there was an event of a release somewhere in your value chain, is that going to be a breach on your part? Are you able to claim force majeure? That are really open questions. Finally, and Martin alluded to this, changes in law or standards are something you need to really keep your eye on. This world is evolving quickly. If you have a long-term sale and purchase agreement, how do you address the likelihood that standards and laws are going to change over time? And finally, you need to think about how you're fitting this into your sale purchase agreement. Are you tagging this onto an existing long-term agreement? Are you negotiating a brand new agreement? And what is the duration? Are these spot sales like we've seen thus far? Or are you going to put this as part of a long-term sale and purchase obligation? So I've raised, mostly questions at this point, but we're short on answers so far. And I'll wrap up my comments there.
Great, thanks, Tom, and thanks, Martin and Frederick and Stephen for your excellent comments. A couple of things that I want to just sort of throw out there for digestion, and ultimately I'll tie it to a question that's already come through from one of our viewers, which I think is a pretty kind of stimulating thought. First of all, when we get to the issue of transparency, right, how do we actually measure GHG emissions up and down the value chain? One of the really, I think, critical linchpins for the future of natural gas to be a successful fuel in the energy transition going forward is addressing methane emissions. And fortunately, and we had recently a webinar on this with some of the principals at Kairos. There are increasingly accurate and sensitive ways to measure methane emissions up and down the value chain, straight through from production to the pipe to processing, et cetera, right, all the way to end use. So, large methane plumes are very detectable from space with satellites. So those sorts of things, because of the transparency they provide to regulators, to investors, to the general public, they're sort of coming front and center, and I think they will be a driver for cleaner natural gas services, if you will, as we go forward. And this actually steps into an interesting question, Tom, that you raised in your remarks, which is what happens if you have diversions of cargoes, and maybe you have one provider of LNG who has already sort of incorporated these ESG metrics into, clean gas certificates that are verified, and the cargo, might be better suited to land somewhere else because there's a profitable arbitrage opportunity. I think one of the things, and maybe after I'm done with this long question, you guys can address, is I think ultimately to provide that flexibility in the market, you're going to have certificates that are tradable. And that actually opens an additional dimension to this whole discussion, which I think is a fascinating one. But before y'all address that, I would also like to throw on the table the question that came from the audience, which I think one of the questions, what I think is fascinating. It's basically asking in a very simple way, is there an organization that should lead efforts for standardization? Or is this something that should be more organic, that maybe grows from partnerships across the industry, and ultimately it leads the industry to a place where you do have standardization? I'd like your thoughts on that, because I think that's an interesting question to ask. So I'll throw it out to the floor, and maybe we can go in reverse, or we whatever order you guys want to go in, I'm fine with.
Well, I'm happy to give an initial thought, which is, I think that, ideally there would be one organization that, because it would promote the standardization that we all want. But what I would say is the problem with that, given that this is not just industry led, it's also policy driven, and there's a lot of different jurisdictions that have views. For the natural gas industry, we need to try and drive it as much as we can ourselves at the outset, because if we wait for an organization to develop that's that involves kind of a policy base, then it will take longer. I think we as companies, suppliers, off-takers working together, we can be a bit more nimble at the outset and try and drive this. And I'd be interested to hear Frédéric's view on this, because it may morph to there becomes kind of that single organization, but to really kind of drive things now, I don't think we can wait for that. I think we need to do what we can as an industry, and work with other potential organizations, but really we need to drive this, because it's a current problem for natural gas, or current opportunity, I should really say, for natural gas to continue leading its role in the energy transition. We the suppliers and the off-takers and the users, I think, need to drive this.
Let me complement. I think first, to answer Thomas' comments, I think it's just a paradise for lawyers. All those new concepts. And we are, I think the thing we are doing is just trying to make it happen, essentially, because we are essentially negotiating SPAs, long-term SPAs. We are in the final stage. And therefore, all the trade-offs you've spoke about, whether it's diversions or all that, we are effectively discussing that. So there will be outcome there. There'll be pragmatic outcome, and the first generation of SPAs will not be perfect, and that will get perfected over time. So I think the impetus is definitely there. On I do believe we need absolutely to go above and beyond sort of the self-drive of the industry. But the pavilion scale, we remain extremely modest. We have no influence on technology, for example, apart from the choices we can make in the next generation of fleet that we could charter, or selecting a supplier. So from the sort of 25 supply proposal we received out of this tender, we were quite amazed to see that, in fact, companies are much more advanced at what we think they are in those details. And they are very much engaged into this debate. So it's a matter of putting things together, standardizing, and I would really think that the upstream and the liquefaction needs to be standardized in terms of reporting, and that's, for me, an absolute necessity. So that, like we talk about how we book reserves, we should have similar type of standards that are becoming a bit of a norm, so that nobody is sort of talking their own numbers the best way. So it should be transparent and sort of neutral. But the complication is the aggregation of the segments on one side. Then it's the ability to transport whatever we end up with, which in our case is sort of simplified by this statement of GHG emission attached to each cargo, to transport it further down the chain. If we want to net, for example, against some of the taxation, or if we want to motivate a marketplace, and etc. And that requires policy making. That requires, the multilateral cooperation. So we do believe that, and we are motivating Singapore government as well in doing that some of those supra entities, not just nations, but also above, needs to come together. And so it's really a team effort across, and we are sort of in a war footing where we need to address that, and in the battlefield all together, facing our own shadows, I would say, but facing them right on. So it's the putting of that together requires, in my view, more leadership than each of the companies sitting casually together and just making the efforts of talking together. And it's not just certification of the methodology, but it's the repository of the certificate. It's certification of the offsets themselves and the marketplace and etc. So yes, that's required.
Sure. Tom, Steve, you want to add anything? Go ahead, Stephen.
Well, Ken, I was going to say, I think you hit the nail on the head, and I would build on what Martin and Frederic were just saying. I don't think we have a shortage of organizations with standards. We took a look at this and identified 7 major NGOs that all are in the business of doing verification and measurement for offsets and reductions. If you then sort of look at what are the overall systems, of course, there's the Kyoto Protocol system of offset certificates that are tradable. Here in the U.S., California, of course, has its own regime that those certificates are only tradable in California and Quebec. So that competing with others, the USDA, as you know, Ken, and the U.S. Congress are looking at possibly doing a nature-based offset credit program that they would organize. So I don't think the problem is a lack of entities and standards. It is a lack of uniformity and cohesion among them all.
Sure. I agree with that, and I'd like to reply to Frederic's remark with a saying that I've heard Stephen say for 20 years since I've been working with him, which is you never want to hear your doctor or your lawyer say this is an interesting problem. And this is an interesting problem, and Stephen's exactly right. A lot of this is emerging, and there are different standards popping up everywhere, different trading regimes, different prices for carbon credits around the world. I think everybody's kind of covered the waterfront on this, although I will say, which kind of supports Martin's view, which is, the decision that you don't make, right, is likely to be made for you. Right, so you really want to get out in front, to the extent you can, to make sure that you are setting the standards, and if there is some way you can do it to guide the policymakers, that's probably, in my view, the best path forward.
That's an argument for being proactive. So I'll make a comment here about, and this is hopefully will address another question that came through from one of our viewers. When it gets to certifying nature-based solutions, so you can talk about soil carbon through the use of alternative land use and soil amendment processes for grasslands, prairies, croplands, rangelands, all sorts of things. Stephen just referenced the Growing Climate Solutions Act, which was presented in the Senate Ag Committee in June of this year, which is really aimed at allowing the USDA to become a certifying entity. And create a standard for soil carbon certification, particularly in farmlands. But when you look at the universe of possible nature-based solutions, you've got the Trillion Trees Initiative, you've got soil carbon initiatives. There's just a host of things. There is no single answer in terms of how much acreage is required because every ecosystem is different. And that's actually what makes the universe of certification complicated. We are actually at the Baker Institute involved in a project looking at soil carbon storage in the state of Texas specifically, but through a different lens, not really from the lens of what sort of policies or regulations are required to increase this as a viable offset. It's really more around creating an architecture where soil carbon uptake can be monetized as a property right. So I joked with the guy whose idea this was, Jim Blackburn, that's a very Texas notion, right? And he sort of laughed and said with his very Texas accent that he knew. But it's a robust effort. Over 50 different members of a working group that we've been convening for the last year and a half, roughly, up and down the value chain, including landowners. A lot of interest from state and federal regulators around what is happening. A lot of emitters are interested in this space, some of whom are actually LNG exporters. So you see this sort of ESG push really driving interest in demand for the ability to certify offsets. And that is critical, right? Certification and measurement is critical. And for that, you need measurement and verification. There is not a single standard out there. There's a host of standards. And what we're trying to do is construct one that will be consistent broadly with those that are out there that are being used, so that you can begin to see some of these types of things take off. It's interesting, though, because this initiative started well before we started talking about carbon neutral LNG. So it's sort of been happening in tandem, and that brings up the whole coordination issue that I mentioned earlier, right? It's you've got a lot of moving parts and a lot of different efforts, and I think it's going to be fascinating to see how they come together. I think ultimately, though, both Martin and Frederick, you mentioned this, it does require reaching up and down the value chain so you can really fully understand the opportunity set as it presents itself. So I have one question that I just want to throw to everybody. I'm going to be conscious of time because we're down to about 9 minutes left. I knew this time would fly by. But when we talk about just big picture, future of natural gas, there's often concern that is raised not only on the ESG front, but also on the policy front about, well, look, natural gas is a fossil fuel and we need to get rid of that too, right? If we're really going to be carbon negative or carbon neutral. And I think what is being proposed here is a viable course of action in the LNG space. But in general, I wonder if you could talk about it being expanded beyond just LNG to think about the full natural gas value chain. And I pose this question because I'm going to do so against the backdrop of a very interesting data point, right? Global carbon emissions have risen dramatically over the last 25 years. So much so that, well, quite frankly, the majority of that growth has been in non-OECD countries, so developing economies around the world. So much so that if you were to completely eliminate all emissions in the OECD, the developed world, global emissions would be at 1995 levels today. So that tells you something about where demand growth for energy, where carbon emissions growth have largely been occurring, where all these things that we're talking about ultimately have to be accepted, right? And in terms of uptake for market viability and long-term sustainability. So I wonder if you could talk, just kind of take a step back from just LNG and just talk about natural gas as a sustainable fuel and how you actually view the future of gas in a carbon neutral world, which is where most of the big actors in this space are increasingly leaning towards going.
Ken, I'd start off with an observation, which I think is sort of interesting from the U.S. regulatory standpoint, which is that if you follow FERC debate going on within the FERC, for the past I don't know how long. I will use the LNG industry as a starting point. LNG projects have been challenged by environmental groups, and one of the challenges they've made for the longest time is that LNG exports are going to cause induced greenhouse gas production upstream in Appalachia and elsewhere. And the FERC and the DOE have said that is not knowable. We cannot assess that when we're assessing the environmental impacts of a particular project. And the courts have agreed with the FERC and the DOE. And there have been some dissenting voices on the FERC about that. But, it's pretty clear that industry, independently of what the regulators are saying now, is moving towards the ability to track this, up and down the value chain. So I think that even outside of LNG, when you're looking at the U.S. gas markets and gas production, we're moving towards this very MRV standard kind of globally. And if you look at Europe, they're looking at methane and being able to quantify what the footprint is of methane that's being imported into Europe as well.
Sure. Martin, Frederic, you want to add anything to that?
Yeah, I guess, I mean, I would just add kind of on the macro question that you're asking, I mean, our view is when we look at sustainability, and think about, green LNG or sustainable LNG, I mean, we always are thinking about it through the prism of, natural gas, right? I mean, it is a commodity, but you can't think about how the LNG market is going to develop without thinking about what's going on with natural gas. I mean, it's just, I mean, it is gas, right? So, I mean, our view is actually kind of set in a little bit of what you're saying as to where is demand growing, what's happening in emerging markets, and what should be happening there, right? I mean, there is a balance to be had between, carbon reduction and, energy growth, right? Equal, equitable, I would say, energy growth across markets. And so, the idea of what the future is, the future for natural gas is to play the role of, being part of the energy mix, right? Making the energy mix more, closer to carbon neutral or carbon negative. But it has a role to play, particularly in nations that need to advance their own, energy mix. They need to change their energy mix. They need to increase their electrification, and natural gas will play that role, right? And but it will have to do it in the context of moving towards more carbon neutrality. So how it does that has been what we've been talking about, but the need for it, from our perspective, is clear, particularly when you move outside of the OECD and you're looking at other nations that have a vastly different energy mix and need to make quick changes if we're going to meet any of our climate goals.
Frederic?
I would add, Ken, that you're perfectly right. This is a fossil fuel. And for the time being, we have not been extremely successful to pitch natural gas as a fundamental part of energy transition. And therefore, the risk that you're highlighting does exist. So I truly believe that we need to somehow change a little bit the approach towards natural gas and the argumentation that as an industry we develop. Typically, the increased oversight or criticism that we can see from environmental pressure, excessive flaring and gas leaks, it's totally unacceptable, And we have taken comfort of not solving that over the years, or solving it in a way that is not, I would say, ambitious enough. So the technology side of the industry has been looking at some form of efficiency, but not so much the form of carbon efficiency that one might expect now in any project. So I do hope that we get the conscience of that and we can address that from what is key, which is a technological angle. On our side, we are trying to provide some, I would say, commercial signals that effectively it's not just about the IOC, but the buyers do care about that as well. And we are here to try to link both in a way that's pragmatic. So, and when it's obviously more complicated when it's continuous flow of gas through pipeline systems than when it's a bucket of LNG that is delivered as a big chunk of quantity in one day, or etc. So there it's easier, I would say, conceptually to. So it is on the broader scale much more complicated, and that's why at this stage we've chosen to do it for Singapore, because we also have this gas is going to remain as for foreseeable. So we do have this strategic angle, strategic supply angle, but it's not enough. It's not enough. So I do hope that there is a bit of a wake-up call that, guys, we need to make some serious improvement there across the industry. And that can be done because there is so much technology, there is so much innovation, and there is so much money as well that has been deployed that, and it's always, the question I get is, okay, that's fine, all that, but are you going to pay a premium? And the answer is probably yes in the short term, but then it becomes the norm. So it's no more a premium. And then because of those technology gains that are going to happen, because I'm going to change my way of trading, because I know it will cost me a little bit more to do a diversion, I don't know, from Singapore to Japan, then the way we use the fleet and manage it will change. So much less of, long voyage, maybe a bit more, which we're already doing in terms of cost and fuel efficiency. We just need to add the carbon efficiency, and that becomes not something bizarre, but part of the day-to-day life of the traders and the optimizers. So that's what we are aiming for. But definitely, you're right. We need to acknowledge that this is a fossil fuel, that we do have, serious concern to address, and the quicker we do that, the better it is.
Great, thanks. I want to be conscious of time here, and I'll just first of all thank everybody, Martin, Frederic, Thomas, Stephen, for joining us. Fantastic discussion. I'll close with a very simple statement. The decline in costs in renewable technologies, the shale revolution, the abundance of natural gas. I mean, all these things have made the landscape just much more competitive. And what you're looking for in a competitive landscape is a way to differentiate your product. And one of the things that renewables has been able to seize on recently is its low carbon footprint. So to the extent that gas can capture that same beneficial differentiation for its own characterization is going to actually bode well for gas's future. So exciting conversation. It's going to be interesting. I actually mentioned at the outset that I was on a call this morning with some folks in Osaka, and we were commenting on market evolution and some things I remember saying back in 2005 about how you'd see more short-term trading emerge, et cetera, and being told by folks at that time that I was crazy. Well, we're seeing that. So I actually fully believe that we'll see more and more of what we just discussed here today as we move forward, and it's exciting. So thank you, everybody.
Thank you, Ken. Thank you, everybody.
Thank you. Thank you all.